Well, it was a record-breaking day on Dalal Street. The Nifty scaled new peaks after 51 sessions to end above the 20,200 mark. The mid-cap index rally continued after that. Index hit new highs for 15 straight sessions. And for the week, Dalal Street recorded its biggest weekly gain in the last 5 months. On this week's Editors Roundtable, we take stock of the record-breaking day on Dalal Street, discuss the key cues for the next week, and put the spotlight on the big hospital deals of 2023. I'm Sonia, and today I have Anuj, Nimesh, Ekta, and we also have Nilesh Shah of Envision here with us. Folks, it has been such a terrific run for the market. No complaints at all from the bulls,
I guess
right?
one of the best November series, right? I mean, 1300 points and all. It was like a dream come true for a lot of investors.
I'll ask all of you a question. When was the last day the mid-cap index ended in the red? You have any idea?
Maybe in October.
November 1st. November 1st.
In a month it has
It's been a month, exact 1 month till now, that the mid-cap index has not even ended in the red. You spoke about 15 days of straight lifetime high being hit in the market. Now, I know a lot of people say this time it's different, but this time it truly has been different. But it's a phenomenal rally. And I think it started with a lot of skepticism when the series started. I'll discuss that, but phenomenal. It's just been phenomenal. I mean, that's the word that comes to mind.
But doesn't that make you a little cautious? The fact that the mid-cap index is just on this relentless rally.
I think Nilesh perhaps can answer that.
Yeah, Nilesh is smiling and he's smiling hard. I mean, Nilesh is going home today.
He's
going to celebrate this
the rally.
weekend.
And he's known as someone who's picked a lot of mid-caps.
Yeah, absolutely.
So,
yeah, but I mean, this is obviously the time to celebrate. I mean, why not? Markets at a lifetime high, mid-caps, small caps doing well, bottom-up stock picking working brilliantly well. You couldn't ask for more. But I think what's even more important is that September quarter was one of the best quarters in terms of earnings. Phenomenal earnings. I mean, on an average, companies grew at 25-30%. Despite whatever unseasonal rain, September being generally a lean quarter, despite all of that. So, all in all, it's been a great time, and
it's not only the markets, but even like the economy. Like the economy is also firing, right? The GDP data second quarter was so surprisingly good, right? I think it's across the board. Manufacturing is doing good, exports is doing good. So it's not only the equity earnings, but also the macro data looks so strong.
Yeah, I mean, this quarter again 7.6% GDP growth. When did we see this kind of growth?
And that means in an environment like nobody else is growing, right?
Exactly. Look at manufacturing. This morning I was having
manufacturing growth.
Exactly. I was having a conversation with Gautam Duggad. He was from Motidal. He was making a point that you will have an earnings growth of 25% this year, and on top of that, on that base, another 15% next year.
Yes.
So and we are at 18.5 times right now on Nifty, and not even obscenely expensive. So who knows where this ends? But let me do one thing. Let me just go through this week's whole market setup, how it was. I am calling it the best rally ever, in a sense, because this feels like a bull market. There have been rallies in the past when you complained about, my portfolio not doing well, for example. This is a rally in which it's had the best rally among all the rallies, and people have participated in this rally. In the last rally, people didn't participate. And this has also been the broadest of all the rallies that we have had. Consistently, the advance decline has been 2:1, 3:1, or in favor of advances. As I said, last time you had red on the mid-cap screen was on the 1st of November. And the market is at a new high without any contribution from the top 5. It's like, if you see Reliance, HDFC Bank, ICICI Bank, Infosys and TCS, they've had zero contribution. In fact, X of TCS, the other 4 heavyweights are all at least 15% away from their all-time high, and the Nifty is at an all-time high. I mean, that tells you the kind of rally that we have had. Look at this year, the Nifty is up 12%, mid-cap is up 38%, and small-cap is up 46%. And as I said, when the November rally started mainly on back of a lot of skepticism. The FII shorting was at highest level at start of November, and the big question I am asking is, will FIs come back in December? There have been signs of that in last 1 week. If they come back and they start to propel the Nifty and buy these large caps, what will the Nifty do? That's something that I
That is the million-dollar question. And Nilesh, I want you to answer that. Reliance, HDFC, Kotak have not performed at all this year. Do you think now is the time when they'll start to perform?
I think so. There's always a catch-up trade in the market, and it's perfectly ripe for any such catch-up trade. That yes, consensus is that mid and small caps have run up quite a lot. Large caps haven't, especially some of the big banks. They've been growing their earnings comfortably at 15-20%, which is not a bad growth rate. And for the kind of valuations at which they're trading at, clearly there's an opportunity there. So yes, I think there's a very, very strong case for some of the large caps to start catching up.
Okay.
So basically, what I did a link, right? Is this a time for Ithik to dance? So that's exactly what he means, right? All the HDFCs and ICICI Bank. It's time for them to now participate and take the market to a new height. Yeah. So
okay. And what are the dealing rooms talking about?
So, Sonia, as we spoke, right? One of the best series in November. Nifty rallied 1,275 points, and we're still counting in, right? I mean, the momentum clearly is with the bulls. And within that, look at the PSU index and the kind of rally the PSU stocks have done. I've been saying for so long time that this bull market, the leadership is with the PSU. So every series you'll see some new PSU stocks doing good. This is the series of power PSUs who are doing so well. NTPC, Power Grid, REC, PFC, all have been stellar returns in the November series. So that's been it. I said last week as well that the trend of bit of fundraising from block deals have started. We spoke about large M&A deals as well. We saw the hospital deals coming this week. A big cement deal got announced this week. So that portion of the market again has started seeing some bit of traction. Funds are getting raised. M&A deals are happening. And look at the IPO market. It was sizzling IPO right in the month of November. Look at the kind of returns the stocks have done. Tata Technologies listed at 1,400 rupees. That was a stellar debut from Tata Technologies. So even December looks quite strong. I did a piece last week as well. Nearly 7 to 8 large issues are coming in. 8 to 10,000 crores will be further raised in the month of December. So the IPO frenzy may continue, and the kind of returns these stocks have given the IPOs have given in November looks like December is going to be equally good as well. So looks like the party can continue. The only thing to watch would be the state election outcome and whether there is a bit of a disappointment there.
Well, Nilesh, coming on that point, I don't know which one to ask first, the IPOs or the state election. But let's start with the IPOs with Tata Technology. What is your opinion on that? Do you think that most of the juice is already factored in, or do you think that that's probably a long-term play? You buy it, put it in your portfolio and sort of forget about it?
Well, at these kind of valuations, I'm not too sure how back-ended the returns will be. In the sense, the returns will be largely back-ended, because I think the business will keep doing well. It's an interesting space. Clearly, software-defined vehicles and the case for automation and driverless cars, and that entire segment clearly is the sweetest spot in the entire technology space. So I think Tata Technologies is perfectly positioned. There's everything going for it: business momentum, pedigree. And then, of course, in the past, group companies have done extremely well, things like Tata Elxsi as well as KPIT. But at these kind of valuations, no. I think it's pricing in too much. It's like Tata Elxsi, right? That for maybe about a year or so, the stock is not giving you returns. Why? Because the valuations are just too premium. They're not just premium, they're just too premium. I think similar is the case with Tata Technologies. So I think at this price, no. I mean, especially if you're a short to medium term investor, it might make sense to take money off the table.
Okay. The other space which did quite well this month is the two-wheeler space, Nilesh. And when Hero and Bajaj came with the premium product, the whole debate was who will win, and all three of them this month have returned 20 to 30%. What do you think is happening here? Is it a case of the market just expanding itself, everyone benefiting from that, or is there something else?
No, I think it's just a shift in aspirations. I think anybody who bought a motorcycle 5 years, 8 years back doesn't want to buy the same motorcycle. He wants to buy a better motorcycle, a premium motorcycle. Aspirations are changing. People have affordability. Access to kind of taking the product on loans is much easier now. So I think it's a combination of all of that. But I'd probably say it's aspirations which are driving premiumization. We're seeing this in two-wheelers. We're seeing this in several consumer pockets. And that, I think, is a very good or a great structural theme that we have.
I have a small anecdote to share, and I shared this with Anuj as well earlier, that when I joined CNBC in 2008, I started covering Bajaj. It was 300 rupees. And today the stock is at 6,000 rupees, which is gone up 20 times, right? I mean, at that time, of course, I barely made anything, so I didn't have any salary to invest into that stock. But if I had done that, Anuj,
you wouldn't need to work.
I wouldn't be working today.
Hindsight is 2020, right? You need to know the next Bajaj of what the Bajaj would be for the next 20 years. As they keep saying, that one of my best friends, for example, bought a Royal Enfield bike in 2004. You know, like you keep saying that if you invested that much money, you would have had a Rolls Royce. But if everyone keeps thinking like that, in that case, you know, the stock wouldn't have done anything.
Yeah. But at least we can think forward, right? You tell us, what's the next Bajaj going to be?
Well, I wish I knew what's the next Bajaj, but you know what? I don't think you should search for the next Bajaj because there is no next Bajaj.
There is no
exactly.
I think people have spent their careers trying to find the next Infosys or the next HDFC Bank or the next Asian Paints. But there is really no next Infosys. There isn't. I think every business, every company has to be evaluated on its own merit. And what you really have to essentially see is that does this company have the growth potential? Is this business going to be capital efficient? And is this company or the management going to be best in class in terms of governance? When you have these three ingredients in place in terms of growth, capital efficiency and governance, you will have probably many Infosys and many Bajaj Autos and many HDFC banks. So I think it's always important to work with a clean slate. If you work with essentially the keeping in mind the past, you'd probably never find the right one in the future.
You know, coming on to those points which you just spoke about, what about IREDA, a stock that you've probably looked at? It's in a sunrise sector, or maybe, you know, something which is now probably seeing much more potential. Would that be a buy?
I don't think so, because lending as a business, I mean, we've seen for a very long period of time, some of these very specific sector-focused lending businesses have actually over a period of time not been the best places to be in. Things like REC, PFC, it's only of late, maybe in the last 1 year, if you've waited or been patient for
10 years.
5 years, 10 years, that you've made your money now. I don't know how many people or how many investors have that kind of patience. And then to kind of really wait for a decade to see your day of gratification, I think is expecting too much. I mean, you have so many things happening. Why wait so long?
Okay, well, you know, one space that has seen a lot of deals that have happened, right? Some big bang deals is the hospital space. So Ekta's going to walk up to the wall and tell us more about that. Ekta, over to you.
Well, yes, you know, this week has actually seen a lot of interest within the hospital space. 2 deals in the listed space is what we saw. So first was Fortis. It was a smaller deal where Fortis has sold Fortis Malar, their listed entity, for around 128 odd crores to MGM. And we also saw Aster DM, which also made a big deal where they sold their Gulf business for a valuation of around $1 billion, where the promoters will be participating, and the listed entity back in India will now only contain the India business. So 2 big deals which took place within the listed space. Now, what exactly is it pointing to? Yes, we've seen a lot of M&A take place, but a lot of the listed companies are doing M&A in order to prime themselves for growth by well thought through capital allocation. So just to give you a sense in terms of what exactly Fortis is trying to do, one of the key themes which is emerging is concentrating on your core markets, coming down to the concentration of where exactly you have your strengths. For example, they divested their stake in another Chennai facility in July of 2023. With Fortis Malar now being divested, they have completely exited the Chennai business. Now that means that they are looking to concentrate more on the northern part of the country, where they also made an acquisition earlier in the year. They did buy a hospital in Manesar to strengthen their position there. So that's on Fortis. Now take the example of these 2 south-based hospitals. One is MGM Healthcare, which basically bought Fortis Malar, and we also had another deal which where Kaveri in fact bought Fortis's hospital earlier this year. Both those companies are just looking to strengthen their operations in the south of this country. That's basically where the focus is. Both of them are not listed, they are private companies, but they are looking to increase their bed count within the southern markets of the country. Now another example is Aster DM, where they are in fact looking to also strengthen their position probably in the south and the west of the country. So they will be getting funds from that Gulf deal. They will be looking to probably pay a dividend, but they are also eventually looking to add around 1,500 beds by FY27. So that is the plan, but mainly in the south and the west of the country. They're probably not going to look to expand aggressively in north and other sections of the country. Now, just want to tell you about core markets. Narayana, they're deploying 250 crores in Bangalore and Kolkata. Medanta, they're looking to launch another hospital. This is in South Delhi with 400 beds. Jupiter, they're looking to probably expand in the micro markets of the West. So all of them are looking to actually grow their core markets as of now. Why exactly are these hospitals doing so? They want to scale their market share. They want to focus on established markets where they already have a brand name. They're looking at cross synergies within that certain geography. They want to scale up their hospital margins by doing that and getting those cross synergies on board. Acquisitions are easier because you already just acquire a business, and hence the EBITDA turnaround is much faster. But the big risk for all of this is competition. For example, the competition is really hotting up in the NCR market. The competition is hotting up in the South market. So there seems to, however, be a focus in terms of the core markets when it comes to hospitals looking to expand within the country. Well, Nilesh, you did mention about affordability, about aspirations of the Indian consumer, and we're probably seeing that take place within the entire hospital space as well. What's your sense? Because we've seen so many deals take place from the private equity front in the listed space. Do you think that would be a place to probably park your money, the healthcare hospital space, for longer term returns?
Yeah, surely. I think it's a great sector. Phenomenal growth prospects. Clearly, healthcare is one of the areas where clearly there's kind of a latent demand out there, and there is need for quality and affordable healthcare. And this is a space where you're going to continue to see a lot of consolidation. So there will be small players, local players, regional players, which will consolidate themselves. But undoubtedly, with increasing insurance penetration, rising awareness, clearly this is a space which has phenomenal tailwinds, and it's a great place to be. The challenge, of course, is that it is a capital-intensive business. It requires capital to be invested and reinvested. That's the key challenge. And you put up a new hospital, it takes some time, some quarters for it to have a decent occupancy. That's the only challenge with the sector, but otherwise, I think it's a great place to be.
I don't know about healthcare, but wellness is definitely, as a space, is picking up in a big way as well, right? Out of all of us here, I know that all of us are only focused on our health these days. So I guess that's a big space that's picking up. And I'm sure there are some listed plays in that category as well, Nilesh?
Not too many. I mean, there are, but like it's still kind of yet small. Now, and again, the definition of wellness. So somebody could be in personal care and beauty care and still call it wellness. But yeah, there aren't too many players, unfortunately, on the wellness side. You will have some of the big consumer companies which would have a very small portfolio catering to wellness. Or you could even have pharmaceutical companies, but again, we have a very small OTC portion, which is into wellness. But there isn't like kind of a standalone wellness company which is kind of playing the entire value chain of wellness.
Maybe we need one of those then, considering the way consumption is growing. All right, let's zip it to a short break. On the other side, we will decode the key cues for you as we head into a new week of trade next week. More on that coming up.